Hello, good weekend to all. Just giving you a review really of the European markets for the trading session. Can we say it's the March now, folks? So 2nd of March 2020. Okay, so please be sure to visit my website there, Intermarket Analysis, www.inter-market-analysis.com, and be sure to catch me on Twitter with all my normal rants and raves. Okay, so in terms of European markets, basically that's my insight today. Going into the worst week in a very long time. I had a very negative week last week. I was certainly caught off guard. And again, I think the latest tweet I've just put out there as well is this week is certainly one where you widen your stops, reduce your risk to a large extent, or you can maintain the same risk and widen the stop loss. Okay, so if you, for example, if you have a 30-point stop loss and a 0.5% risk apportioned to that, then certainly you can keep the 0.5% risk, but widen the stop loss to say 100 or 150, given the crazy volatility that we've seen last week. Okay, in terms of the markets, then let's see exactly where we are technically speaking, and certainly see exactly where we could potentially head this week, and if the actual low is actually in. Okay, so let's try and go through each market. In my estimation, my understanding, Asian markets certainly do dictate the globe. China is now the superpower. Therefore, we need to look for a cue there. So let's look at the European, or should we say Asian markets first and foremost. So FTSE China certainly coming into support now, double bottom, given the coronavirus, obviously affairs that certainly rocked China, and obviously the stimulus measures that certainly came into place, and the market certainly rallied until obviously we closed the gap here, and it certainly spread around the globe, and Europe certainly and America obviously started to shake. And we've had a risk off ever since. Okay, so that's the status quo, and it certainly seems to have travelled further afield, and therefore is hurting everything globally as we speak, and the market's certainly panicking now. From what I can see, Friday we did have some coordinated stimulus measures from the Fed. Okay, Mr. Powell coming out with a speech, certainly putting forth his argument for further stimulatory measures there in terms of cutting interest rates, etc. We've also had news from over the weekend with regards to Italy. Apparently, stimulus measures there. I think a package of 3.6 billion euros, and further stimulatory measures from the US as well. So, and Mr. Trump certainly downplaying the virus as well. Although the cases certainly have increased by 50% in Italy and worldwide as well, certainly on the increase, with further cases reported in the UK and also Spain and also US as well. So, how do we stop the rot? That's the question. Okay, so again, my argument is China certainly is coming into support here, so we are looking for a potential bounce here based on China. The Nikkei 225 coming into 200 MA support, although one could argue we've got further room to run on the downside. One could certainly expect 20,000 and a potential gap fill here down at 16,000 as well, or should we say 16,000, 19,600. So keep an eye out for that potential level on the daily chart. Now the French, or should we say the Japanese Nikkei certainly has been extremely bearish, especially given the fact that the Japanese yen certainly is increasing as well. Now again, the yen certainly does play a major part. Now we do have gap fill here around the 20,500, 20,600 down to 20,300. So a lot of support around this region, so watch out there. We are looking at a potential gap lower tonight, given the increase in number of cases and deaths as well. Worldwide. Okay, so we look at it synonymously with the USD JPY chart. Okay, so let me just quickly bring that up for you. USD JPY chart certainly gapping lower as well, so therefore expect risk off. Okay, given the fact that the markets certainly do follow the yen and the CHF and the dollar as well, although the dollar certainly is decoupling, given the fact that the Fed is now obviously into dovish mode, given the fight against coronavirus. So again, support is seen around the 186.70 zone. So again, USD JPY certainly into support as well. So therefore, looking at those three charts, I certainly wouldn't be extremely bearish, especially with a big gap down. In my opinion, I'd certainly be looking to potentially buy, okay, based on those three charts. Let's look at the S&P 500 now, and let's look at the US markets and see exactly where they are. Okay, so daily chart certainly putting in a bottoming tail, rallying very strongly in the back of Mr. Powell's comments. Okay, so certainly helping the stock market there. The pivot low around 28.50, certainly the bottoming tail that certainly has gone in. I think that's the first bottoming tail that we've seen in the S&P 500. So again, that's another strong bullish argument. So anywhere around the 28.50 zone, certainly from my understanding and my perspective, I'm happy to be a buyer here. The S&P has fallen from 3,400 down to 28.50. bearish news from my perspective certainly has been baked into the equity markets. That's my argument, okay? And don't be surprised if you go up and close the gap at 31.50, 31.20, and 33.50, 3400. That's out of the equation. But as we know, stock markets and QE, etc., you can't certainly discount that. But nevertheless, I think 3100, 3120 certainly will be a target, potential target. I mean, initial target 29.80 on that gap fill here, and then obviously if the markets certainly do go into a super bullish mode with a coordinated global response, then you are looking at a potential, obviously a powerful short squeeze here as well. Okay, so we did get a 1,000 point move on the Friday. I think the S&P closed anywhere near 3,000 if I can recollect. Okay, so it's quite an impressive thrust after hours as well. Okay, nevertheless, let's move on. So S&P argument has been made that we are looking for a potential bounce. Now the S&P is always dictated by the Dow Transports and obviously which I'll look into shortly as well, which is the Russell 2000. Okay, so daily chart, yes, the Dow Transport certainly coming into support again. Another bottoming tail that certainly has been put in here. You do have support around the 9,000 zone, so watch out in that area. And the weekly chart certainly is showing you potential support zone there as well. So certainly looking for a potential pop and a bounce there. In terms of the Nasdaq, from my understanding, certainly is immune to a lot of the coronavirus fears, given the fact that it's technology led. So bear that in mind, folks. From my understanding. Yes, I mean, you can argue obviously with the market certainly being highly leveraged, and therefore a lot of money would be going into tech, and obviously when it deleverages and de-risks, therefore tech certainly gets hit as well. But nevertheless, I'm certainly expecting that. I mean, as you can see here as well, technically a perfect bounce for that 200 MA. Okay, actually rallied and actually closed the gap. So out of all the indices, there's a tech that actually closed the gap. Okay, already. Okay, whilst the rest of the obviously indices are certainly languishing, so that certainly is a bullish sign. Any consolidation within that zone down to 8130, 8200 certainly would be a buying opportunity for me. Okay, and certainly looking for the Nasdaq to be the first one to bounce back, which in turn should trigger the actual global rally as well. So again, as we can see here, Nasdaq certainly holding that 200 MA and looking to bounce, and therefore I will be super bullish going into the Nasdaq this week. And again, previous resistance equals support, so testing that key zone there. So certainly looking for a potential rally in the Nasdaq. Okay, let's see if we can show you any of the charts here that I may have. You've got the semiconductors as well that we could potentially give you an insight into, but I think that's enough for now. Let's move on to the European indices now. Okay, so daily chart of the German DAX. Again, we've held that key support level. We've put in a potential bottoming tail here as well. The euro has an inverse relationship, or certainly has started to create an inverse relationship, so it would be unfair for me to talk about the DAX without talking about the euro. So quickly bring up the euro chart here. Now the daily chart, the euro USD, when the euro USD tops out, that's when you'll see a bottoming in European equities, so bear that in mind. Okay, now previous support equals resistance in this zone here, horizontal resistance here, and we are now coming into potential resistance. Now we've certainly retraced more than the 75% fib, as you can see. And this is a key zone. So if you do push high to 1.11, okay, you have 1.11 as face resistance, okay, and 1.1050 as resistance as well. So therefore, looking for the euro to potentially slide. Having said that, though, bear in mind also the European indices that have been rallying on the back of a weaker or stronger dollar, weaker euro, certainly will not be getting that same level of, or should we say, same wind behind its tail, given the fact that obviously we've got weaker Chinese growth and weaker American growth, etc., etc. And Europe is certainly the weak link out of all the global markets to a large extent. So just bear that in mind. You'll see a very fast recovery in the US market compared to the European market. It's my estimation, given the fact that the dollar is being talked down, given the fact that Mr. Trump has asked the Fed to lead, and Powell, obviously Powell's statement on Friday as well. So that certainly is something to take into account. Okay, so having said that, though, the euro, obviously, as we've seen quite a thrust higher, you are going to see a rally in the Aussie and the Kiwi as well on the back of a weaker dollar. So again, is how you're going to play that. Are we going to see a rally in a short scope covering rally in European equities accompanied with a euro dollar rally as well? That's the question that we need to ask ourselves. Okay, if the euro starts to pull high up to 1.12, 1.13 on the back of the dollar certainly falling lower, will that actually deter European equities to push high on the back of obviously competitive obviously competition in terms of the currency actually getting stronger and obviously hurting exports on the international market. So bear that in mind. That's something to certainly take into consideration. Okay, so euro dollar certainly coming into potential resistance, which in turn should technically help European equities. German DAX holding that key zone or key support 11,880, and again, if we do flush lower, then you are seeing support around the 11,600 zone as well. Looking at the weekly chart, the German DAX, again, the real support really is seen 11,260 and down to 10,500 if the market continues to slide, so bear that in mind. Okay, in terms of the French CAC, let's just bring up the French CAC for you. Okay, French CAC again flushed back down to gap fill, closed the gap and then rallied, so you do have solid support around this region, around the 5,220 zone. Let's just draw this in, 5,225, and you are seeing support around the 5,160 as well, and looking for a potential rally up to gap fill above. Okay, so multiple gaps to potentially fill. You've got the gap here at 5,680, then the gap here at 5,500, so watch out for those two gaps on the French CAC. In terms of the Euro stocks, let's just have a look here. Weekly chart clearly shows support here, as you can see. Weekly chart solid support around the 3,270, 3,300 zone, so looking for a potential rally there anyway on the weekly chart. And the daily chart, as you can see here, we've bounced off that key support zone. Okay, so a potential short squeeze rally to 3,450 certainly is on the cards for my understanding and my interpretation. Previous support equals resistance, so a classical technical retrace there. If we do potentially retrace up to 3,600 and 3,640 before we potentially start to fall lower again. We do have key gap levels here as well, so watch out for 3,450 and gap fill at 3,580 as well, so look for a potential short squeeze on European equities. Now moving on to the FTSE 100 then, quickly give you an insight here, just quickly give you the insight into the FTSE MIB, which is the Italian index. Now given the fact that they've started the stimulatory measures, that should certainly help put a floor under European equities, especially in terms of the FTSE MIB, and you can see here the key diagonal trend line certainly coming into play anyway. We did actually fall below the 200 MA, which is a concern, but nevertheless stimulus always wins, and you can't fight central banks, and therefore expect a potential short squeeze going forward. In terms of the FTSE 100, let's just quickly give you a FTSE 250 chart. As you can see here, daily chart certainly holding support and putting in a potential bottoming tail, so watch out there, looking for a potential rally in the FTSE, and that's exactly what we're seeing on the FTSE 100, especially going into the close on a Friday. As you can see, the weekly chart hitting that key support zone around the 6,400 zone. Okay, in the weekly chart, as we all see, certainly key support and certainly holding, and therefore that will certainly expect it to hold going forward. And daily chart certainly putting in a bottoming tail here. Okay, so let's quickly show you this, folks. Okay, just above 6,500, looking for a potential rally. If you do see a rally, then you're looking at up to 7,000 potentially, but again, the dollar is weaker, therefore commodities will certainly rally, and therefore the FTSE certainly is in a prime position to rally strongly compared to European equities. So looking for European equity weakness versus FTSE strength. Okay, and that will be led by the S&P 500, and Nasdaq will be the strongest of them all. Okay, so I hope I've given you an insight there in terms of my prediction going into this week, and wish you the very best, and be sure to check out my website and certainly catch me on Twitter. Goodbye now.